Every time the world feels unstable, people expect Bitcoin to collapse with it. But that expectation misunderstands what Bitcoin is designed to do. Bitcoin doesn't exist to make you feel comfortable during volatility. It exists because volatility in the world keeps getting worse. Over the last year, we've watched governments dilute their currencies, global debt climb past $350 trillion, financial rails buckle under stress, and major infrastructure providers like Amazon Web Services fail for hours at a time. And through all of that, Bitcoin hasn't changed. The code hasn't shifted. The rules haven't moved. The supply hasn't inflated. It has continued to do the one thing it was engineered to do: operate independently of the systems that keep breaking. This is the part most people forget when they judge Bitcoin by week-to-week price action. The value of a neutral, permissionless monetary network becomes most obvious when the traditional world is wobbling. Today is one of those times. Around the world, monetary expansion has become the default response to every crisis. The US alone has increased its national debt by more than $10 trillion in just 4 years. That dilution has consequences. Savings lose purchasing power, assets become inflated, and the gap between financial reality and monetary policy keeps widening. Bitcoin can't be adjusted this way. It can't be printed, expanded, or politically manipulated. That fixed supply schedule is why it reacts sharply during macro stress. But it's also why people reach for it when they want a monetary anchor that they can trust. Price may move, but supply does not. And in an environment defined by dilution, that distinction really matters. The global debt system has quietly become dependent on speed. The overnight repo market, the engine behind institutional liquidity, moves trillions each day just to keep the financial system functioning. And now we're seeing a transition. Major institutions experimenting with digital settlement rails because their existing infrastructure is too slow and too fragile to keep up. JP Morgan settling intraday repos on-chain, central banks testing tokenized collateral, funding markets modernizing around programmable money. Bitcoin isn't part of that system, but it proves why these upgrades are happening. It showed the world that money can move without intermediaries, without delays, without opaque risk. The repo market is simply trying to catch up to an idea Bitcoin introduced more than 15 years ago. When AWS went down in October, it took banks, airlines, retailers, payment apps, and large parts of the internet down with it. But one thing didn't go down: Bitcoin's base layer. Nodes kept running, blocks kept producing, transactions kept confirming. Bitcoin is one of the few global networks with no central kill switch and no reliance on a single infrastructure provider. It was designed this way intentionally because single points of failure eventually fail. That principle looked theoretical when Satoshi wrote it, but in 2025, it looks like common sense. Self-custody is part of the same idea. Your access shouldn't depend on a company staying online. Your savings shouldn't disappear because some server cluster hit a bug. Bitcoin was built to remove that fragility. During chaotic periods, people want Bitcoin to behave like a stock: stable, predictable, easy. But if Bitcoin reacted the way traditional assets react, it wouldn't be Bitcoin. Its value isn't in smoothing out volatility. Its value is in refusing to change its monetary rules no matter what happens globally. When currencies dilute, Bitcoin stays fixed. When institutions wobble, Bitcoin stays permissionless. When infrastructure fails, Bitcoin stays operational. When politics shift, Bitcoin stays neutral. The price moves because the world moves, but the protocol remains constant. That reliability is exactly what gives it long-term strength. Markets go through cycles of panic and relief, but Bitcoin's purpose doesn't change with sentiment. Its job isn't to make every price chart look smooth. Its job is to give people a monetary system that doesn't break when everything else does. If you want deeper clarity on how Bitcoin fits into today's financial environment, You can explore more at learningcrypto.com. It's where we share the data, tools, and frameworks that help you understand these cycles with confidence rather than emotion. Thanks so much for watching. I'll see you in the next video.